Good weekend, all. Ira Epstein, and here we are with your good weekend. Ira Epstein with your Spider ETF stock market wrap-up, your weekend edition, which means weekly charts for Friday, August 22nd, 2025. Now, let's go right to the event of the day. And it was Fed Chair Powell. And my take on what he did, he said that he's no longer that concerned with the inflation. He accepts the fact that inflation, they think they have a handle, it's going to rise. It's going to accumulate each month, probably get a little bit worse. And that's the impact of the tariff roll that is going on. The Fed said they'll basically watch it and probably not fight it because they expect this to do what it is. The big change was that they're not talking raising interest rates to fight it. They got freaked out, I want to use that word, with the big change in the downward revision in the last jobs report. And I think that has completely taken over the Fed going, wait a minute, we don't have all the jobs that they said. And we're trending down. That's very clear. Just take a look, run your 3-week moving averages off the numbers. So what they decided to do, and this is my take again on what he said, they're going to be proactive to help the labor market. He didn't commit to lowering interest rates in September, but if the PPI, CPI, and the jobs report are super hot, it's a good bet that he's going to give you the 25 basis point move. He already said he knows the PCE number. He quoted the July PCE at 2.9%. So anything in that zone, he's comfortable. If the interest rate break isn't taking place in September, he made it clear it's live for the other meetings. So, political pressure, yep. The idea of a shift, yep. An out because the data is not good, it's right there for him. This was the easiest decision to make. Doesn't have to fight with the president. The president will always say he's too late, but there you go. Now I'm concerned. Are we headed towards stagflation? And if you don't know what stagflation is, that's a subject I'll cover another time with you. But we could be headed into that right now. Got to be careful. So obviously the change of thought kicked the stocks sharply higher. Dow was up almost 1,000 points intraday, finished about 850 higher. On the DIA, you were up 869. I mean, just take a look. But there were markets in the red. Orly didn't do well. You're looking at, let's see, UNG was down again. There were a few others. I think Lucid was down. By the way, Lucid's going to do a reverse 10-for-1 split to give it a $20 value roughly. Most of the other markets saw nice gains throughout the day. So that's the important thing. The question is, how did the markets get overdone today? Maybe, maybe not. It wouldn't surprise me. You can get another day follow-through on this from the Johnny-come-latelys, and it's also that weird time of the year. I mean, August is traditionally not a good time of year for trading, and volume lightens up. Yet today, I'm sure it came alive. I keep getting questions about Ethereum. So you can either trade it via the futures, or there are 3 or 4 funds, big ones, that handle the Ethereum. So I just picked the VanEck. I had no reason to pick it over another one. They all opened up July, I think, 2024. So you're not going to be able to get a lot of data going back. I'll show what we have. When I look at the chart, the pattern is bullish. You have higher lows, higher highs. The market is held and been holding since May, the 18-week average of closes. The resistance is proven to be the Bollinger Band, but it has latched onto it and not given up on it. And when that happens, you often cause the slow stochastic to embed. So pullbacks in the market, to me, still very bullish. This is tied, as you know, to stable coins theory and all the others, and a lot of people think this is going much higher. In Netflix, it was one of the losers today, so it tells you it's not ready to go. Netflix is stuck at the 18-week, and it probably has to stay there a bit. Markets that didn't respond well today, what are they going to respond to? This was the most bullish information you could have had recently. Joby didn't respond well. This is the fun stuff. You look at it and you go, okay, it might want to have to go back to where it broke out from, this area here of the $11. Toast did rally, not much. It held the 18-week average, and that's about all that you could say. Momentum is still down, and it's not trending higher. Home Depot soared, up 3.5%, $13 a share. Now, other things are taking place. The president today went after furniture that's coming into the United States. So Wayfair, Restoration Hardware, companies like that, aftermarket got hit pretty good. Lazy Boy was up because most of their products are made in America. But he's really clamping down. By the way, Mark Carney, the Prime Minister of Canada, got together with the president, and now, today, they announced they are lifting in Canada most of the retaliatory tariffs. They were the only country that retaliated, and now they're going the other way. They didn't win that battle. What we did is we lost a good friend because we didn't treat them right. I'll go on record saying that over and over. I have a lot of Canadian friends. I respect them. I love the country. They're always there for America. I didn't like the way we handled them. You see it, and you can take it or leave it. I don't care. Higher lows, higher highs. Uber, as far as I'm concerned, back to the resistance zone that I had my clients already coming out of on breaks. I think it's a buy, but it's overbought here. I like Uber. I think this is going much higher. It's a question of how to come in and handle it. Dash came back. It only lost a quarter point. It made everything up for the week. It did lose its embedded reading. It's not the place to be, but rising tide lifts a lot of ships. XLI, the industrial sector, strong, but losing the embedded reading. I don't know that you chase that right here. It's got to catch that reading this week and prove it can keep it. Energy sector, with the dollar falling, anything to do with energy should get a bid, and you're coming up a bit here. You're at the resistance we've been at week after week since May. So this whole time, that's all that you've been able to do. In the dollar, should you take out the lows of not this week, last week, that could open the door to go back to the 26.96 level. Is the dollar going to break out to the downside? Right now, everything that I see points to it. If you get one cut, you're going to get more cuts. I don't know how far this has to go. And as you're cutting rates on one side to help jobs, on the other side, inflation's going up. That could be stagflation, and that's not good for the U.S. economy. And that would hurt the dollar. In gold, I now think that you have no business going through this week's low again. If the inflation is here and if it's allowed to run, why would it take that out? I'm just giving it my theory. So I think you can be long the market with stops under this week's low in the metals. In the miners, you can see they're just taking off because this helps demand for everything. And Dutch Brothers Coffee, just sitting still, doing absolutely nothing. Again, not the place to be. So not everything went up. You get the back and forth action. That's what you want to see in this. And I think you get more than that if you get to our website and you try the free offer. So you sign up for my subscription. That's what you should do. Because we were putting out buy here, sell there all day today. I was doing that Spider ETF. I had done it. And now I'm ready in the stock and the futures to come back into those markets. It's been a while. It's been a rough trade period. You do remember, we were down 5 days in a row in the S&P. You made it up today on a statement. It's unbelievable when you think about that. So go to IraEpstein.com. You can click the icon up here or just IraEpstein.com. Sign up. I'm Ira. You have a great weekend. I'll catch up with you all on the other tapes that I put out tonight, the videos, or first thing in the morning on Monday. Take care.